I'm a co-fund manager with Emily. I've been at BlackRock for 20 plus years. Before that, I went to LSE, where I studied international relations and history. And since I joined BlackRock, I've been traveling around the world looking for interesting investments, been to about 70 countries or so, some great ones, some less great ones, and constantly trying to find the right places to put our clients' capital.
I've been at BlackRock for 17 years. I also joined as a graduate, slightly different background though, as I studied physics. We launched the fund in 2010 and I was named co-manager in 2013. So the fund invests in frontier markets and smaller emerging markets. So we take out the developed markets and we take out the largest 7 emerging markets. So we take out China, India, Korea, Taiwan, South Africa, Brazil and Mexico. And we take out those markets because they represent around 85% of the emerging market benchmark. And we think they represent about 95% of where most emerging market fund managers would spend their time. So we invest in those remaining small markets which we think are overlooked and where people don't really focus. And we think that they actually have a lot of really interesting investment opportunities. And by focusing on that area of the market, we can really add value. So the fund is up 19% over 1 year, it's up 67% over 3 years, and it's up 36% over 5 years. And I've managed to reel off those numbers because we were thinking about 1967, and 1967 I think was the coldest winter that we've had in recent history, and Big Ben actually froze.
We have to spend a lot of time traveling to the countries we invest in, and it's really, really important that we do so. Many of these countries are not democracies, many of these countries aren't run as we would like them to be, so when we meet companies, we have to not just meet the companies themselves, but also their customers, the suppliers, and their competitors, and typically the competitors are more reliable about the company themselves. It's also important when we visit these countries, we interact with politicians, statesmen, journalists, students and others, because we aren't just investing in a corporate, we're investing in a society, and we have to understand that society at large before we commit our clients' capital. The first thing to say when things comes to a 12-month outlook is this is an investment only for the long term. These are very volatile markets, and therefore one has to really look at sort of a 3 to 5 year time frame before saying anything else. Obviously the first outlook for the next 12 months is Spurs win the Premier League, but after that it's important to think about the parts of the world that are benefiting from some of the macro trends we're seeing today. We're seeing a world splitting into 3, sadly, the East, West, and then I guess the neutrals in the middle. But there are some strange beneficiaries coming out of that. Southeast Asia is doing well. The Middle East is actually doing fairly well, and parts of Latin America are too.
At the same time, I think we're also reaching a point where we have seen inflation already peak in the emerging world and start to come off. And I think we will reach the point in the developed world where we do see inflation peak start to come off and rates start to fall as well. Actually, in our countries, we didn't have the same government handouts as we saw in the Western world. And as a result, the government finances are probably in better shape now. That's not through them not wanting to have supported their populations through COVID, they just didn't have the ability. As a result of that, we now have, when we do get to the point where we have interest rates falling, governments in better shape, actually we're expecting to see quite significant economic acceleration in the majority of these countries. And we have to put that in the context that the PE valuation of our fund is somewhere around 10 times at the moment. So we're expecting to see a world that's growing faster than the developed world, at valuations that are cheaper than the developed world. And over that 3 to 5 year time horizon that Sam talked about, we think that's really interesting.